If you're interested in exploring the world of Tesla stock splits, then this video is for you. In 2020, Tesla's stock underwent a 5-for-1 split at $2,000 per share. 2 years later, in August 2022, the company split its stock 3-for-1 at $900 per share. But what if I told you that the next stock split could just be around the corner in 2024? What if there was a way to strategically acquire shares with the knowledge of an upcoming stock split and cash out on the increase in value? Before we get into the nitty-gritty, hit that like and subscribe button and make sure to share this video with your friends who are looking to make some serious income as well. Let's dive in. First, it's important to note that a stock split is not the same as a share buyback. A stock split involves dividing the existing shares of a company into multiple shares, which effectively lowers the price per share, but keeps the overall value of the company the same. A share buyback, on the other hand, involves a company purchasing its shares back from shareholders, thereby reducing the number of outstanding shares and increasing the value of the remaining shares. Tesla has engaged in both stock splits and share buybacks in recent years. The company's first stock split occurred in August 2020, when the stock was split 5-for-1 at a price of $2,000 per share. This was followed by another stock split in August 2022, when the stock was split 3-for-1 at $900 per share. These stock splits were seen as a way to make Tesla's shares more accessible to a wider range of investors, as the higher price per share before the splits made it difficult for some to invest in the company. In terms of share buybacks, Tesla has also made headlines. In March 2019, the company announced a plan to buy back $2 billion worth of shares over the course of 2 years. This was seen as a way to return value to shareholders, as well as to signal confidence in the company's long-term prospects. Then, in February 2021, Tesla announced another share buyback program, this time for up to $5 billion worth of shares. As for the possibility of another stock split in 2024, it's difficult to say for sure. Stock splits are typically announced by companies based on a variety of factors, including the overall market conditions, the company's stock price, and its goals for stock growth. While it's certainly possible that Tesla could announce another stock split in the coming years, there's no guarantee that it will happen. In terms of strategically acquiring shares to cash out, once a stock split is announced, it's worth noting that this is a speculative strategy that involves significant risks. It's impossible to predict with certainty when a company will announce a stock split, and even if one is announced, there's no guarantee that the stock price will continue to rise afterward. As with any investment strategy, it's crucial to do thorough research and consider all relevant factors before making decisions. Before we get into projections and specific figures, there are a few interesting facts to consider about how Tesla executes its stock splits. As I mentioned earlier, Tesla's first stock split occurred when the stock price was $2,000 per share. The second time, it was closer to $1,000 per share. This suggests that the company prefers to avoid 4-digit stock prices. But why would any corporation want its stock price in the thousands? Even though companies like Google and Amazon performed a 24-to-1 stock split, it's still considered impractical to have shares valued in the thousands. It's predicted that Tesla's next stock split will be in the high hundreds, around $800 per share. Another interesting fact is that after a stock split, Tesla doesn't want its share price to drop below $200. The low end of its price range is around $300, so this is a significant point to consider. Looking into the future, initial estimates predict that by 2030, the number of new electric vehicles, EVs, on the road could be around 14 million, with a possible closer estimate of 20 million. While we don't have specific numbers for Tesla's full self-driving (FSD) subscriptions or how many customers are paying for it each month, let's assume that 15% of newly sold vehicles will convert to or pay for the full FSD package. With that in mind, let's make a projection for 2030's earnings per share, EPS. Let's say that EPS could be $45 in 2030. Some might think this is a bullish estimate, but we may be surprised by Tesla's early performance in this coming year. When calculating stock prices, the price-to-earnings (PE) ratio is an important factor. In 2020, Tesla's PE ratio was around 50. However, in 2023, the PE ratio is currently around 60, even though we are still in a bear market, which makes this PE ratio impressive. If you're interested in exploring Tesla stock splits and the future projections for the company's production and delivery statistics, don't forget to hit that like and subscribe button. Predicting Tesla's future involves considering a lot of variables: market trends, interest rates, inflation, and even the Federal Reserve's policies. Despite this uncertainty, I predict that Tesla's P/E ratio will hover around 50 for 2023, with a potential bull market expected by the end of this year or at least halfway through it. Looking ahead, Gary Black, an analyst, predicts that Tesla's stock price could rise to around $370 per share, which would give the company an incredible PE of 74 and a market capitalization of $1.2 trillion. However, I believe a more reasonable PE ratio of 50 would put the stock price around $400. But there's always the possibility that the market could become irrational and drive prices up well beyond their actual value during a bull market. Stock prices in companies like Tesla, Meta, and Netflix may seem like cash-printing machines, but they can still plummet by as much as 80% if investor sentiment shifts dramatically. Assuming Tesla undergoes another stock split, the stock price could drop to around $200 per share, which might result in a fourfold increase in the stock price in the aftermath. I believe that in 2025, the price could drop to $45 with a PE ratio of 45, and in 2026, it could rise again to around $700 with a PE ratio of 40. Looking toward the future, I don't foresee Tesla's PE ratio rising above the low 20s for the rest of this decade, unless some major innovation propels Tesla stock to new heights. If we assume that the average PE for the next decade will be in the mid-50s, then Tesla's stock price could fluctuate between $300 and $400 in the years to come. By the next decade, the PE ratio may drop to the low 30s, and Tesla stock might face a slower growth trajectory. If Tesla undergoes a stock split during these years, it could have a significant impact on the overall performance of its shares. When exactly will Tesla perform a stock split? It's difficult to say for sure, but I predict that with a PE ratio of 60 and a stock price around $300 in 2023, the company could perform a stock split by 2024. By 2025, the stock price might drop to $45, while in 2026, it could rise to around $700 with a PE ratio of 40. There's a lot of speculation about whether Tesla will split its stock anytime soon. It's possible that the next split could occur when the stock price reaches $500 to $600 per share, likely in the later stages of this decade or the early 2030s. I personally believe that 2026 would be an ideal time for a stock split, but anywhere between 2025 and 2027 could also work. For anyone considering investing now, it's important to note that during a stock split, the total value of an investor's holdings remains the same. The number of shares increases while the price per share decreases proportionally. For instance, if a 2-for-1 stock split is announced, an investor who owns 100 shares before the split will now own 200 shares after the split. However, the value of their holdings will remain unchanged unless the stock price increases after the split. Owning a larger number of shares can potentially result in greater returns on investment during a stock split. However, it's crucial to remember that investing carries risks, and there are no guarantees of profit. Stock splits are not the only factor that affects a company's stock value. Investors should consider the overall performance and future prospects of the company before making any decisions. Although stock splits are hard to predict, it's clear that Tesla aims to keep its stock price within a 3-figure range, making it more accessible to everyday investors. We'll have to wait and see how these projections hold up in the coming years, but I feel confident in my predictions and look forward to watching how it all plays out in reality. Thank you for watching. If you enjoyed this content, don't forget to like and subscribe. Again, thanks for sticking with me until the end, and I'll see you in the next video.